Well, telecommunications company Blue Label's first half headline earnings per share increased by 44% to 36 cents. Joining us in studio are CEOs Mark and Brett Levy. Thank you so much for joining us, gentlemen.
Thank you. How are you?
You seem to be smiling a lot about those numbers. Do tell us about what fueled most of that growth?
Most of it came, we had a great organic growth during the period of 6 months. We also received a once-off payment, which obviously the source and circumstances are confidential.
That once-off payment, though, was quite a significant amount. We're talking about more than 79 million, and you're saying you cannot say anything about it. Will we ever hear about where it came from?
No, we're bound by strict confidentiality, so unfortunately not.
Okay, let's talk a little bit about your operations. You don't only operate here in South Africa, you are seeing a lot of growth here, but you also operate in the UK and Mexico and India, but there seems to be a bit of problem in Mexico and India. What's happening there?
Well, I don't say they're problems. We actually view the opposite. We think they're very good. Mexico, we've partnered up with a company called Grupo Bimbo, which are the largest bakers in the world. They operate in over 850,000 stores in Mexico and 17,000 truck routes. So what we intend doing is placing digital devices in as many of the outlets as possible. And while you're rolling out footprint, so you're incurring operating costs to do that. So we are on track. We had 5,000 devices in May of last year. The end of December, we ended off on 20,000, and we're rolling out steadily over 2,000 devices a month. So it's a big rollout, very complex. But we see only positives, not the negatives. India, on the other hand, we've been there for a longer period of time. What we've been intending doing is diversifying from being a pure airtime provider to focusing on financial services. The margins are depressed in India, and as long as you continue rolling out footprint, so you'll incur operating costs to roll out that footprint.
I want to talk a little bit about the UK, UCash. It seemed to contribute quite a significant growth there, and UCash, from what I was reading, growing into Argentina now. What is your relationship with that particular company?
So we have a smaller shareholding in UCash, approximately 15.8%. Really what it was set up for, it's digitizing of coupons, if we can call it that, set up mainly for the internet, mainly for certain sites on the internet. It's approximately in 450,000 points of presence across Europe. So very integral in our product offering, very integral getting us into certain areas where we can't get into on our traditional products. So a great turnaround. First year where they're showing real significant profit or moving into significant profit, and really looking good for the coming months and the coming years ahead of it. So product point of view, really good as an offering and really looking good as a company.
You seem to be looking quite good on a strong cash position where you are at right now. Going forward, particularly in the next financial year, are you looking towards other partnerships like this, acquisitions? Where do you see most of your growth coming from?
Look, the cash shouldn't burn a hole in our pocket. If you look at what we've done during the last year, is we brought up Microsoft's share of their shareholding of 12%, which for just under 400 million. We paid a dividend, we bought some bases, so we spent in excess of 650 million rand last year. So we're quite prudent. Mergers, acquisitions, we're always looking for those type of things, but we're very prudent in our approach. So yes, we keep looking, but it's not going to burn just a hole.
One of the things that is here in South Africa, we know about it, but we're also seeing it in India, is you talk about the badly banked and the underbanked sections of populations there and here. Where else are you seeing that opportunity, and how do you plan to capitalize on that?
I think definitely in the countries we are. So starting obviously off with Mexico, India, South Africa, looking at a really badly banked and very underbanked population. But most of the world actually has at least a badly banked, but we're looking at what we consider the masses of the world, where we're really looking for people who are not banked, underbanked or badly banked. So we call it the next billion. Everyone's been after the first billion, which is the internet computer literate population, and we're after the next 3 or 4 billion, which are really the unbanked people. So it's really the imagination's a limitation. There's pockets in every country that really fit into what we do.
Your market share in this country right now, over 60% market share in your industry right now. In terms of competition, do you sometimes, and the partners that you come across, these acquisitions, what are you focusing on right now to not only keep that market share but to grow it?
Look, competition's real all the time. You know, we're one of the very few companies that offer a horizontal suite of services. So if you look at vertical airtime, you'll have competitors. If you look at different products like electricity or bill payments, you have competitors in those arenas. But, you know, people offering the full suite of products, it's very complex. It's very capital intensive of developing these solutions, affording credit to a lot of these customers. So we're very vigilant. We understand that competitors, we need to be one step ahead of them, not looking over our shoulder about them. They need to be worried what we're doing. So there's no complacency in our organization. We're a young, dynamic, hungry organization, and we need to ensure that we stay constantly ahead of the pack.
You closed or one of your operations in Nigeria there. It didn't seem to go so well. What happened, and are you planning to go back in? Because that is quite a lucrative economy to be in right now.
So Nigeria for us was a major focus. We still consulted in Nigeria, so we still have a presence. But the major reason for initially going to Nigeria was a 10-year contract that we had with Multilinks, which obviously has been cancelled. I mean, it's been in the news for the last 6 or 8 months, and going to arbitration with Multilinks towards the 3rd or 4th quarter of this year. So always looking, I mean, really from a resource point of view, taking the resource in the 4 countries that we have. But for us, we're looking at all countries all the time, as long as we don't spread ourselves too thin. Africa for us is obviously a great option. We have been in other countries besides Nigeria over the last 5 or 6 years, namely Mozambique and the DRC. So keeping our options open all the time, just making sure that very focused and not too widely spread.
It seems as though emerging economies are quite a focus for you. Why is that?
Well, we understand how to deal with cash, to do micro payments, micro collections. If you think about it, doing a RAND transaction 500 kilometers away, making money off that transaction, collecting that cash and banking that cash is a very specific skill set. So most of the economies that we are into are cash orientated economies, are prepaid orientated economies, and they need services, they need products, they need first world products but they need to pay for it a way in which they used to, whether it be cash, debit, credit or EFT. We're not prescriptive, but we are better enablers of that.
Thank you so much for joining us, gentlemen. That was Mark and Brett Levy. They're joint CEOs at Blue Label.